Good friend Todd Horwitz from Bubba Trading. BubbaTrading.com is the website. Good to see you smiling here again today.
Mark, I'm always smiling. You know that, right?
You are.
I mean, come on. It's XM147. Hello, everybody.
Hello, that's exactly right. Listening on the radio as well. All right. Tomorrow's report, anything there that you're going to be watching, or does it make much difference tomorrow?
I don't even care. This is where you look at, if you're an extremely active trader, you might look to take advantage of a report because typically when reports come out, you get some counteraction. In other words, the report might be bullish, but the first reaction by the first words might have been bearish, so you might see a push down and then a straight up rally, or vice versa. To me, I have no interest in the report. I don't care what it says because in my eyes, Mark, most everything's already been priced in, and in today's world, I don't think there's going to be that many errors that are going to make the market and make some major gyration. There's too many other problems out there right now to worry about what this report is going to say tomorrow.
And a lot of those problems, as you put that word out there, is our outside factors. Am I correct?
Absolutely. It's the outside economy, Mark. We have an economy that is breaking down. We have people that do not make enough money. The Fed cheered or championed that 211,000 jobs they delivered on Friday, but they didn't tell you about the 50,000 they lost between Schlumberger, Halliburton, and the others, and the 50,000 they lost make more than the 211,000 they hired. So it's not a good balance. We're being totally misled down the entire road here, and that is holding a lot of weight on our producers and our farmers because the bottom line is it affects the dollar. And as the dollar continues to rally, it creates more pressure on the commodity space, and that creates more pressure on our friends, the producers and farmers. But I think that they will be rewarded. Again, if they can hold, it's great because I think, again, I'm still bullish the space. I'm not changing. I'm looking for spots to buy. Our levels have been really solid as we've talked over the weeks. But overall, I think if they can hold, you're better off holding and learning how to hedge versus anything else.
So that's a general statement across the grain trade. You like where the grains are. They can move higher. They're not straight up or straight down, but a general trend. Corn, beans, and wheat, in your view, is higher?
I think it's all higher. I think, and you said something very important. I just want to get this. I know we're short on time, but I don't want them to go straight up. I want them to gradually go higher because as they gradually go higher, if they form a new trend, which would be higher, then we get much more explosion. And at the end, let them explode. But for now, I'd love to see a nice, slow, rolling, moving up trend, building strength underneath, continuing to have buyers step in. That's what I really want to see.
Maybe, higher highs, lower and higher lows.
Higher lows and higher highs.
There you go. All right. I'm going to get some numbers here real quick before we take a break. We're going to have you come back and talk about livestock as well. Todd Horwitz live from Chicago coming up. Corn is up 3/4 for the March. The soybean trade also under pressure, down, but not as much as an hour ago. They were down 6, 7.5. Now March down 6 1/4. The wheat trade currently March Chicago down 2.5. Kansas City March currently down 3 1/4, and Minneapolis the March contract there getting the volume down 3.5. Todd Horwitz live from Chicago. The livestock trade coming up in 1 minute.